Hi, I'm Howard Atkinson, President of Horizons ETFs Canada, one of this country's largest ETF providers. I've been a part of the ETF industry since its inception. In fact, when I was a financial advisor early in my career, I invested client assets in the TIPS, which tracked the TSE 35 index and was the world's first ETF. Certainly, the ETF industry has come a long way in the past 25 years, now accounting for roughly $3 trillion in assets globally and almost 400 ETFs in Canada, representing over $85 billion in assets. Of course, there's a lot of discussion about the growth of the ETF industry and its disruptive impact on the investment management landscape. Lost in this discussion is the reason why ETFs are popular. The appeal of ETFs remains largely the same as it did when TIPS were launched 25 years ago: empowerment. How are ETFs empowering? It's not so different than smartphone technology. Smartphones today have the computing power that only a decade ago would have required a large desktop PC with thousands of dollars of hardware. And a decade before that would have required an entire server room with tens of thousands of dollars of hardware. ETFs are the investment industry's smartphone. Simple, cost-effective tools that level the playing field for investors so that a portfolio of ETFs that you can build today is not so different than the portfolio that took a team of money managers to build 2 decades ago at 10 times the cost. Why would an investor choose an ETF over owning equities or a mutual fund? We believe that there are 3 key reasons that investors should choose an ETF over other types of investments. First and foremost, ETFs are typically lower cost. In general, the ETF fee structure is cheaper than that of a mutual fund. Paying high management fees can erode a portfolio's return over time. The average annual cost of an ETF is about 38 basis points, or 0.38% in Canada. And if you look at some of the lower cost equity index products, many are priced well below 20 basis points. Compare these costs with a typical equity mutual fund and its 200 to 225 basis points, or 2 to 2.25% of annual management fees. Fees matter, and over any longer investment time horizon, you're paying significantly more in fees with a typical mutual fund over a typical ETF. Keeping fees low is one of the simplest and most effective ways to significantly boost your long-term returns. ETFs are flexible. With ETFs being listed on a stock exchange, investors are able to trade them intraday to match their immediate view of the market. Unlike a mutual fund, they will not need to wait until the market closes to execute their buy or sell order. Being a listed security has other benefits beyond having the flexibility to buy and sell throughout the trading day. Because ETFs have a listed ticker symbol and daily trading data, you can use powerful investment metrics like technical analysis, short and long-term momentum indicators, and even relative strength to evaluate the investment potential of a fund. Diversification. With almost 400 ETFs listed in Canada and another 1,400 in the US, there are few, if any, liquid asset classes not covered by ETFs. Even within asset classes, ETFs can offer precise exposure. You want corporate bonds? There's an ETF for that. You want Canadian oil and gas stocks? There's an ETF for that. You want hedge fund exposure? You guessed it. There's even an ETF for that too. You get the idea. This is important because, as we know, having access to a broad range of non-correlated asset classes, otherwise known as diversification, is an important determinant of long-term portfolio success. ETFs allow you to easily build diversified portfolios that reflect your long-term risk-return objectives. With ETFs, you're leveraging the institutional scale of the fund, so the cost of buying and owning the securities is much lower than trying to buy all of the underlying securities on your own. Buying an ETF holding bonds or preferred shares, for example, is much easier and cost-effective than buying each of the single issues. Again, it's all about empowerment. So whether you work on Bay Street or Main Street, ETFs can level the playing field giving all investors the opportunity to have a portfolio that truly suits their goals.